traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all. TGIF. Aren't you happy this week's over? Or almost over? Yeah, me too. I am too. Uh, Without a doubt. I am very excited. Going to head out to northern Arizona for a day. Enjoy some, go up to the cabin. Enjoy some pine smells. It's always nice. All right. So, what are you guys doing this weekend? I'm curious. All right, so let's take the euro dollar. Today we have, like I said, we have import prices. We have Canadian employment data. And right now, as you can see, the euro dollar is testing at 786 retracement. Okay, pretty key support here. Let's get rid of that. Let's get rid of this. Actually, I need that. Let's get rid of that. Okay, so we're now. How many? I mean, I'm assuming. I'm assuming you read my blog yesterday. My blog yesterday was all it was is a result of the conversation we had at Lunch Money. The good news is when you guys when I blog about stuff, it's usually just it's topics that have come from conversations that we've had here. But if you guys missed the Lunch Money webinar yesterday and you didn't get my plan for the dollar, I should probably do that first, just because this way it'll help explain, the thought process here on the euro dollar. So let's go over to the dollar index really quick, and we'll kind of go backwards today. So the dollar index, the thing is we rallied from our. Let me keep that like that. Okay, so we rallied from the lows, and we had a bearish wedge. This is the job, or excuse me, the FOMC meeting minutes right here. Okay, that was the meeting minutes, and we were talking at that time that we could either break higher or break lower. Obviously, we've broken higher. And what's really interesting is you get people. It kills me because you get people that are really too smart for their own good. When I say that is you got these like Ivy League guys and gals. They're so smart and they try to parse everything and like, oh, but the Fed was saying this and their actions speak this, and and then they're looking to take down their balance sheet this way, and how are they going to do this, and blah blah blah. It's like, dude, you guys are going to talk yourselves right out of trades every day, all day long, because you don't know how to read price action. I mean, let's face it, the dollar ripped after it was strong right after the FOMC meeting minutes, and it continued to stay strong and got followed through yesterday. So it shouldn't be surprising that right now, this morning, that we're higher. I was going to actually write all that in a blog, and I decided to, I don't want to go out and, bash people that are like, they're so, but unfortunately, some people are just so intelligent that they trip over themselves. They can't trade because they're too smart for their own good. I think, for me, it's a benefit that I didn't graduate sixth grade. Wait, what did I say? I'm just joking. I'm just joking. But I really try not to think too much about things. I try to get a general sense of what the market's doing and the macro backdrop, but without confusing it too much. What's most important is price. Price is very telling of what the market feels right now. And right now, they want dollars, and we're in a range bound. We've had a strong move, and it is what it is. You can cut it up all you want, but and try to talk yourself in or out of things. But the fact of the matter is the dollar broke out. It was a bearish wedge. We broke to bullish, and we put in a double bottom. And right now, technical targets point to a new breakout. Okay. and it points to breaking new highs. Now, I don't know if we're going to make it up there, but I'm hoping we do because, like I pointed out in the daily chart, hey, if this happens, let's crap. Give me a second to redo this. If we break into new highs, I can pretty much guarantee you relative strength is not going to follow. So let's go over to this daily chart here. Okay. And let's zoom in. Oops, that's zooming out. Okay. So I can pretty much guarantee you at this point, if we hit new highs in price and we match this double bottom and we extend and break into new highs, right? We do this, dude, break into new highs. What I have a feeling is relative strength won't even come anywhere close to new highs, right? I have a feeling that we're going to do this. We're going to get overbought and then roll over, and then you're going to have, divergent relative strength as you hit new highs and high in price, which is going to set up for a great short. And that's the way I'm looking to play the dollar index. I think there's a lot of people that are trying to fade the dollar right now. And like I wrote in my blog, I've tried it a couple of times, didn't work. Even though I'm short the dollar yen's not, that doesn't equate to the rest of the dollars pairs out there. So, I found it safer just to buy dollars on dips. But I have a feeling this next push up is we've got some unfinished business up here as we have the monthly 618, which is the golden fib level, which you guys know that I've been anticipating a move in, ever since we broke here in the dollar, ever since we broke there, that 30-year downtrend line, I go, hey, you guys can remember my analysis if you can remember over the last 6 months. I'm like, as soon as we broke out, I'm like, realistically, we're probably going to the 618 retracement, and then we're going to stall there. You guys might remember that. Okay. So we are approaching that 618, and frankly, if we break into new highs, we're going to come really close to it. So I think that's some that's some unfinished business for the dollar, and if we get up there, I'm willing to actually sell the 618. Okay, I'm really willing to do that. I just, like I told you guys earlier when Paul was here, I just don't know how I'm going to do it. I don't know if I want to buy the euro. It's like, do you buy the euro when Greece is pretty close to a default? Do you buy the pound? In the next 2-3 weeks ahead of the election? I mean, so it's like, okay, well, what are my other choices? Do I buy Swiss francs, knowing that the Swiss franc is very much shunned in the face of the Swiss National Bank keeping rates at a negative 0.75%? Or maybe do I buy commodity currencies, and if the stock market reverses, those commodity currencies are going to get crushed, I would think. So it's a tough choice on what to do if we get up here, and I want to sell dollars, but ultimately that's my plan. It's like my plan right now is, okay, we're going to make it up here in the next couple of weeks, and then I just got to figure out how I'm going to facilitate shorting the dollar at that point. Maybe I just add to my dollar yen shorts. I have no idea. But for right now, what you'll notice is we are probing a 618 retracement in the hourly dollars. I mean, I'm assuming this is resistance where we're at right now, but we're also above spike highs over here. So, um, you know, we probably have to do this. And let me delete, not that. Let me delete this really quick. There we go. Okay. So let's go and grab a fib extension tool so we can find what some intraday resistance is. So intraday resistance at 161% extension is 100. So if you're talking about the dollar index, 100, it's a brown number. It's probably going to be a lot of sell orders around there. So it doesn't surprise me that if we get up there and we just start bouncing around today. Now I know you're like, oh my God, if we get up to 100, where's that going to put the euro? I mean, that could put the euro near 105, realistically. I mean, it's entirely possible. So the breakout point here is obviously really key support. But let's forget that for a second. Let's this is going to be tough because it's so close. 99.20. 99.20. And why is that green? And I don't want that green. Okay. So 99.20 is, or what's the high here? 17, 18. So I'll just say 99.15 is support, very minor support for now. Um, but we can pull back to that. It's it's possible. It is a possible. We are very much range bound. Okay, let's go over the euro dollar. So here's the euro. So the euro is taking out the 786. Holy moly. Unbelievable, huh? I think it's pretty crazy, personally. I think it's nuts. But, a lot of very loud dollar bears out there. And like I said, I'm not 100% positive that being bearish the dollar when you're up at 110 was really the right call. Um, Obviously it wasn't, but okay. So 105 would be the 161% extension. Think about that. Where we're talking the dollar index. Okay, to get to 100, the euro would get to 105, right? Well, that's 161% extension. So that's it. 1.05, and that is strong support. Um, Resistance. Where is resistance for the euro dollar? So resistance would be here at 106.35. This is just exact opposite of the dollar index, by the way. Okay. Next resistance is way up here. So I'm going to write that down, but I don't know if it seems necessarily doable at this point. 106, 106.35 and 107. So, for those people that want to short the euro dollar, those are the places to do it. I sure as hell can't short it right now. I can't. I'm not short the euro dollar. Shorting the euro dollar right now doesn't make any sense to me. Not saying that the euro can't go down to 105. It's just I can't justify the risk reward at the moment. Okay. We're very much in a range environment. Let's go over to the cable. Now, the pound, on the other hand, this is something you really need to pay attention to. So here's the cable. We broke into new trend lows, if you guys didn't see. Okay. So here's the cable. We're approaching 161% extension, but this breakdown today, if this breakdown holds, we're back into a bearish trend. Okay. The lows here, 146.30. As long as we stay below there, it's bearish. Support 145.90, which we're coming up to. Below that, we're going to have to. I mean, if you let's go over to a 4-hour chart. These are all extensions, right? Let's get rid of this one. We don't need that anymore. We've surpassed that. Here's your 161% extension there, and let's see. Spike low to spike high. Remember that spike where we thought the dollar was going to go to hell in a handbasket? I mean, the next support comes in at 145, basically. And you start going, what? 145, So as long as we remain below, well, remain below 146.30, but really as long as we remain below 147.35, we're in the bearish camp. 147.35. 146.30. Okay. I mean, because this is going to be, that's the support right here. Here, let's grab this line. Let's put it right here. That support, is, you can see a new breakdown here. I don't know if it's going to hold. I sure as hell wouldn't be shorting the pound down here. So let me say that again. I sure as hell wouldn't be shorting the pound down here. But there's a lot of longs that are getting stopped out at the moment. Okay. Um, so anyway, don't know don't know about or how to approach that. All I know is the pound looks bearish. Okay, pound's bearish. Let's go over to the Swissy. So the Swissy, here's another monkey wrench to throw in your dollar bearish thesis for those of you that are trying to put one together. Um, we have the double bottom and the Swissy that's playing out. Okay, that points us from 98 to where we're currently at to above parity, right? Um, we have inverted head and shoulder patterns that are working. I mean, there's a lot of stuff that's working for the Swissy right now. We are at resistance right now. I mean, if you guys feel like taking on some risk and you want to short the Swissy right now, do it. You know, don't risk much. I'm not going to do it, but I'm just saying that if you want to do it, this is probably not a bad place to be on the short side of the Swissy, at least temporarily, as we do this. But don't keep, don't, uh, don't, keep your stops too far away because we can come blowing right through this, right? So we are at resistance right now. Next resistance is 99 and a quarter. Support 97.90, 97.50. Actually, 97.50 is major support. 97.90. Okay. Let's go over to the Canadian. Uh, 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 Obviously got out of the Canadian a little too early. I got out yesterday at 125.91. Okay. That's probably where we're going right there. False breakdown, as we pointed out earlier this week in the yellow circle, right? False breakdown led to a move higher. We're above the 618 right now. Minor resistance coming up at 126.55, and then 127. Now we have to write down these numbers, 26.55 and 127, because we have a Canadian jobs report today. Remember the Canadian jobs report, I think we created 1,000 jobs last month. Hold on, let me double check that. We last month we lost 1,000 jobs. Okay, expected to lose 500. Expect to lose 500 jobs. Wow. I mean, you're basically expecting flat employment, but the market's also looking for a tick up in the unemployment rate. So keep that in mind. So if we get a disappointing number, obviously the dollar Canadian can touch 127 really fast. Okay, really fast. The reason why I say really fast is because this is so important to understanding the swiftness of this Canadian move. If you were stuck here And like I said, there's a hedge fund manager in particular I know is extremely bearish the dollar Canadian at the lows. I mean, at the lows. You got people, I mean, there's a lot of people that were really bearish the dollar Canadian in the morning. I got up what 2 mornings ago, and I'm like, man, everybody in Europe is bearish the Canadian. Everybody. A lot of people are still stuck short there. They've been adding on this bounce. They're like, dude, I'm going to short more here. I'm going to short more here. Because I'm expecting eventually the dollar Canadian to go down here. So, but more and more of them get stopped out as we go higher because the squeeze it becomes unbearable from a risk standpoint. So you have to keep getting squeezed out because you're like, okay, well, I still think it's going to go down, but I can't take on this much risk because it's hurting too bad. And when you start skewing risk models, then you have to start covering. That's really what it boils down to is as bearish as people stay, they have to continue to cover because if you don't, you end up wiping out your entire hedge fund or account or whatever the case may be. Anyway, so I still think that because we had that false breakdown, there's a good chance we can rip right to new highs. So this is one of those currencies, like I said, if the dollar index actually hits new highs and the dollar Canadian hits like 130, I'm going to short the hell out of it. Why? Well, let me show you. This is a monthly chart of the dollar Canadian. Everybody see that? See this right here? That's 131. That's 134. So we start approaching this sell zone. If the dollar index hits new highs and the dollar Canadian rips up towards the 130, 131 level, I'm going to start shorting the dollar Canadian, right? This is, especially as North America starts to go into a drought. I think the dollar Canadian's actually a currency. Canadian currency is actually a currency I'd rather own. Mark that for like people like Elaine that likes to write down stuff. From what I said like 2 years ago or 3 years ago. Elaine, write that down. North America goes into a drought. I'd rather own the Canadian currency. So shorting it up at dollar Canadian at 131 to 134, it's more my cup of tea. Okay. All right. Now, does that mean we're going up there today? I don't know. I mean, as far as I know today, the Canadian jobs report could be a blowout, and Canada could create 20,000 jobs, and the dollar Canadian is going to sit right back down here at 125.20 by the end of the day. So, I your guess is as good as mine on a jobs day, but those are the risks, really. Okay, so for right now, support for today, which is really important. See that high? See that shelf of lows right there? See that? See how we rounded it right there? Uh-huh, 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 uh-huh. That comes in at 125.75. Okay. Let me see if I'll do the Kiwi really quick and then we'll do well, you know what? Since we already did it. Oh, I forgot the dollar yen. Shoot. You know what? We'll do the yen, the Kiwi, and the Aussie when I get back. I forgot we did the dollar index earlier. So let's take a few minute break. Don't go anywhere. Thanks everybody for being here. You guys are great as always. I appreciate each and every one of you. Well, maybe. Yeah, I appreciate all of you. I'll be back in a moment. Don't go anywhere. All right, traders, this is Blake Morrow, and you are listening to the Morning Edge webinar. If you guys haven't noticed, the euro just hit new lows, cable just hit new lows, Aussie hit new lows, Kiwi hit new lows. So we need to go see what's up with the Aussie, Kiwi, yen. The dollar yen is holding below its highs. So you might go, well, the dollar yen's still, the dollar yen's going up. Yes, but the Aussie yen, euro yen, pound yen, those things are getting crushed right now. I mean, look at the pound yen right now. Take a look at this. Take a look at this. And this. And this, there we go. And that. There, look at the pound yen right now. Holy, What the fudge sickles is just happening right there. Yeah, I mean we are really falling. Um, all right, let's go back to the. Let's start with the kiwi. So here's the kiwi. All right, so we're in a triangle. Here's your 4-hour chart, just so you guys can see it. Okay, let's tighten this up a little bit. Let's just make sure that we're where we're at. Okay, all right. So you guys can see how important the support is here at well, 74.80 or so. These triangles really, really efficient, and you can see them all over the place where you hit a new high, or you probe a resistance and then reverse, or we can hit a new low if we hold the support and bounce pretty good. But check it out, guys. This is really critical supports. Below 74.80 opens up a pretty big move, in my opinion, because now you're talking probably a Gartley, which could end up being a bullish Gartley too, like this. Okay. Um, that's a realistic expectation on a move lower in the Kiwi if we can break through here. So, and I'm just obviously freehanding it right now. We'll have to get specific, in the event that that happens. But we rejected the tip off here is we rejected the 786 retracement. You see that? That's the tip off. So that opens up for a harmonic pattern if we break through the triangle. I know some of you want to take a screenshot of that, so just go ahead and do it. Okay, there you go. So now 74.80 is going to be support. And guess what? We're still in a range environment. I know as much as you want to say, oh, it's bearish, oh, it's bullish. No, we are in a range environment. Okay, making an assumption that the Kiwi is going to break down right now is not a good assumption. I think it's a likely assumption, but I don't think it's the right assumption. You can't really assume that that's happening at the moment. You have to, wait for the break. Obviously, this is a 4-hour chart, so where's rallies are probably going to be capped here. 75, 35. Oh, that's so close. I hate doing this to you guys, but I'm going to have to. 75.85. Sorry. I know you guys hate me for doing that, but I have to. It's we're too much in a range for me to say otherwise, and I'm not going to just put in a resistance right here at 75.30. You know what? I will, but I don't want to. 0.7530, then 0.7585. Okay, let's go over to the Aussie. Here's the Aussie. Just yesterday, somebody was noting how the Aussie's gone up 3 days in a row, and I'm just like, well, of course it went up 3 days in a row. We had the RBA that didn't cut rates. What the hell did you expect was going to happen? Of course it was outperforming. You had to get readjustments from those people that thought that the RBA was going to start a cutting cycle. Um, um, here in this meeting, the banks had to readjust, and so what you had is you had 3 days of readjustments from institutional readjustments. Okay, it's over now. Okay, now we've got problems. Now you got what could be a continuation pattern for the Aussie. So I'm going to write down that this is really key support today. I mean, if this breaks, we've got all sorts of problems because there's a lot of people. Once again, just like there was right here, and I'll just point it out once again, and I'm going to just stop right there. Right here, a lot of people thought, Aussie's going up forever. A lot of people got long the Aussie this week. They're like, it's outperforming, it's doing great, stock markets are rallying, I'm buying. Well, now they all own it, somewhere around 77 cents, and here we are. They're going, oh crap, why did I buy that thing? So, now it's getting almost the point where people are looking at their positions going, why am I long the Aussie right now? Somebody, somebody give me a good argument now, because if you don't, I'm getting the hell out. Okay. So 76, it's a low here. 76.25. Uh, it's key support. Resistance now. Now anybody who's long is like, give me out. If we can get up back up here to 76.80, I just want out. I've been accumulating the Aussie for the last few days, and if we get back up here, just get me the hell out. That's what thoughts are going to be. We are in a range. I know as bearish as it looks right now, it's really just a big range. Dollar yen, and I forgot the dollar yen earlier. So the dollar yen. So I was thinking last night we're going to go up to 120.80. We went as high as 120.73. Hold on, let me pull up live market alerts so you guys can. Oh, what are they doing up here? Okay, so last night, if you look at the wrap, okay, so I'll highlight it for you. So expect the euro dollar to find some very strong support in the 106.20 to 105.90 level. That was the 786, and we are actually breaking below that now. Dollar yen resistance at 120.80 to 190 should be very sticky. All right. Um, we went as high as 73 before reversing, but if you want to know why that those levels would be sticky, it's because we have a couple extensions that come up there, and the confluence is pretty tight up here. Okay, we have 127% extension of this move, 161% extension of this move, so this should have been a sell zone right through here, which we came just shy of it because there's a lot of people who are like, hey, the Hang saying, oh, the Nikkei stopped at the 127% extension, blah 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 blah. All right, so that was going to be the sell zone, and it was, off by a few pips, but anyway, I guess let me delete all this stuff because it's getting quite messy. Sometimes you got to start from scratch. Okay, you gotta just kind of go, okay, where are we, and you know. So there's your 120.80 level, 127% extension, and you can see right through here. This can be really key support for the dollar yen. That comes in at 120.20, okay, and 120.80 right here. Really, just we're kind of boxed in here, so 120.20. I think the dollar yen's somewhat confused at the moment because it's like, hey, it's like confused the way I'm confused. Wait a second, the dollar's strong, but the stocks are, you got the DAX hitting highs, but the yen strengthening. What kind of a lot of different things happening. So,